I tried to steelman why you should not open a trading 212 stocks and shares ISA if you live in the UK, and I can't come up with a good reason. Bear in mind, I have nothing to sell you. I have no promo link, no affiliate code, no links, nothing. I just use it. I think it's the best product. It's a no-brainer. It's zero commission investing, no account fees, and they pay you just over 4% on uninvested funds. So it's like the best bank account on the market too. Even if you don't invest any of the money, just pay it in to the stocks and shares ISA. What is a stocks and shares ISA? It's a tax-free wrapper that the government lets you put £20,000 per tax year into. And your goal, first and foremost, should be to use that £20,000 per year allowance up that the government in this country allows you to invest tax-free, so that whenever any gains that you make inside this account are all tax-free. Here's mine. Okay, here's mine. All this money here, whenever I buy, sell, trade, whenever I come to withdraw it, I pay zero tax to the government. They have zero claim on any of it. Nothing. Anything else outside of a stocks and shares ISA, you have to pay capital gains tax on. So if you look here, in 1 year, I've made this fantastic return of 124.1% over the last year, 25 grand. It's tax free. It's like a no-brainer. This is the key that unlocked investing and growing wealth in my mind, and it was the key that set me off on the journey. If you're not doing it, I don't know why you're not. Even with £100, okay, whatever amount of money, you have to start somewhere, don't you? Even if you don't want to buy any stocks, then just leave it as cash sat in the account, and you're getting currently with the Bank of England rates 4%. You can't get bank accounts in this country are so rubbish that you can't get 4% unless you lock away the money in some crummy traditional bank account with like HSBC or something and agree not to do any withdrawals for a year, and then they might give you 4% if you're lucky. You can just put it inside the stocks and shares ISA. It's tax free. You can withdraw it at any point instantly. Funds are instantly settled, and they're paying you 4%. How do they manage to pay you that 4%? Well, like, here's the cash that I've got uninvested sat in my account. They are fully transparent with you how we are holding your money. They split it up between each of these banks and some qualified money market funds. There's some FUD on the internet that says that qualified money market funds are slightly risky, so they will make you tick a box to activate interest on your account that says you're happy with them putting some of your money into a qualified money market fund. But I feel zero risk as a non-financial advisor. Okay, I feel zero risk having all my cash sat there uninvested in a qualified money market fund, because if you look at history, it tells you that in history, I think there's been one qualified money market fund that lost 2% of its share value, and that happened in 2008 during the financial crisis, before lots more regulations happened to make all of these things much more safe. So at the worst financial crisis since the Great Depression, one qualified money market fund basically ended up with $1 per share, ending up being worth 98 cents per share. And I think everybody got compensated anyway, and almost nobody lost any money. So it's a no-brainer. qualified money market funds, in my opinion, are worth the non-existent risk to me for my money. I can't advise you because I'm not a financial advisor. So yeah, it's like a no-brainer. It's such a good account. I love it. They have ready-made pies for you to invest in if you don't know what you're doing. Commission-free, no account fees, 0.15% on foreign exchange fees. You buy a stock in US dollars, 0.15%. What's that? £15 in £1,000. You can buy fractional shares. Bank deposits are free. You can use your credit card if you want to. I wouldn't. Well, maybe I would, but but bank deposits are free, withdrawals are free, funds are settled instantly. It's in a stocks and shares ISA, so it's a fully regulated by the Financial Conduct Authority, protected by Financial Services Compensation Scheme up to 85 grand. Your cash is safeguarded and ring fenced. Your investments are held at interactive brokers, and you own the underlying stocks. And you'll realize that because you'll get, if you own, for instance, SoFi, and SoFi has a shareholder meeting with a shareholder vote, you'll get emails and links to go and vote as the underlying shareholders, proving that you own the underlying assets. Again, I come back to just the fact that you can earn 4%. Means that you could just use this stocks and shares ISA as a bank account and get 4% with unlimited withdrawals on this cash if you don't have any balls to invest it. Just a no-brainer. You might think, SJJ, as bullish as you are on the stock market, why do you still have £1,000 sat there uninvested then? Well, it's because over the next couple of weeks, I mean, it's barely anything. It's 1/50th of my ISA. If you look at it, I've got 50 grand in there, and that's like 1/50th of that. Sorry, I'm having a brain fart. It's just because over the next 2 weeks, Trump is playing hardball with President Xi of China. So the markets are going to be volatile. We're going to be up and down as Trump threatens tariffs and President Xi threatens to restrict his rare earth minerals, and they both get to the table and hash out a deal and figure it all out. And so I'm waiting for somewhere to... I'm looking for another dip. Every time there's a dip, I get excited and I'm like, what can I buy that's on sale? What can I buy that's on sale? The other place I put my money that basically is like cash. Really, I should just get that £1,000 and stick it in Nvidia. This is the other place, Nvidia. Nvidia to me is like holding my money in cash. It's the most. It's the biggest company in the world. They have such promise. It's just like giving your money in cash for me. So I park money in Nvidia when I don't know what else to do with it. And that's because I am bullish that overall, with my time horizon, even if the worst happens, I can ride it out because because history has proven that the market return goes up over time, even in the face of the worst disasters. As long as you don't panic and sell, if the worst happens, you'll ride it out anyway over a period of about 10 years maximum. Let's say you invested all of your money all at once instead of dollar cost averaging over time, all of your money all at once at the peak of the dot-com bubble. That would have been unfortunate, but you would have had to hold your money about 10 years to get it all back. Okay, that's a lot of opportunity cost, and it's very unlikely scenario that you're investing everything right at the peak of the biggest bust in history, including a 9/11, an invasion of Iraq, and the global financial crisis happening. But you'd eventually have got your money back after 10 years anyway. So as long as you don't panic and sell at the bottom, then it tells us that then look up here. This is where you'd be now. By the way, no, you wouldn't, because oh yeah, this is where we are right now. Sorry, I thought we were looking at the shorter graph. This is where we are right now, right up here. So if you'd have bought in here 25 years later, you're much, much richer than you would have been just with your money sat in a bank account that at the very best, all it does is offset inflation if you're lucky. Okay? Your money would have stayed flat. Offsetting only inflation with interest. But most likely scenario, the value of your money would have gone down because interest rates rarely outpace true inflation. So also bull markets outperform bear markets. This is Vanguard's bull and bear markets over time. What is a bull market? A bull market is defined as a price increase of more than 20%. Bear market is a price fall of more than 20% down. Over time, over the history of the stock market, we can see that bear markets are short-lived and bull markets are longer-lived. So if you are unlucky and you invest right at the top of the very end of a bull market and you end up in a bear market, you just have to wait for the next bull market to bring you back out of it. The lesson is, the lesson is just wait. Okay, if you're so unfortunate, and you'll win in the end anyway. Because there's bull markets, bear markets, and bull markets last longer and run higher over time. As long as you have an investment time horizon of about 10 years or more, you're going to be good. And what are we in now? We're in a massive bull market because we unlocked a technological revolution with the invention of AI 2 to 3 years ago. And all of these people are saying it's real. There are a few people on the internet saying, it's all a bubble, or it's fake, or it's overvalued. You need to be the sole judge of whether that is true. What I believe is that we are in a technological revolution. This stuff is real. It's amazing. The build out of it happening is going to take at least 10 years. You can't do this stuff overnight. It was just invented 2 to 3 years ago. All of these guys, by the way, are in a prisoner's dilemma. Who do we have here? We have Mark Zuckerberg, CEO of Meta, Jeff Bezos, CEO of Amazon, Indian guy, CEO of Google, Elon Musk, CEO of XAI and Tesla. These are in a prisoner's dilemma because they can't stop spending capital. They can't stop now in the AI race because one of the others will beat them to it and win out in the end. So they're all competing against each other. Not one of these people can take their foot off the accelerator, because if they do, they lose. Jensen Huang, who is CEO of NVIDIA, believes that we're in a transformational period in time and history. This is a generational bull run. There's no slowing down. That this is the fourth industrial revolution. arguably the last industrial revolution. Will there be things that run up too high and pop? Yes. Is there going to be froth in the market? There already is. Are there companies that are overvalued? Yes, there are. Are there companies that are going to fail? Of course. If you invest in some of the silly things out there that aren't generating any profit whatsoever, like, I don't know, quantum computing or stupid things that are just complete moonshots, you might get burnt. If you just like park your money in Nvidia, which, by the way, is generating $40 billion worth of revenue and $20 billion worth of profit per year, you're probably just going to do well. You won't 10x your money in 2 years like I did with Rocket Lab on a company like Nvidia, but your money won't go down 80% over, like, you know, if the bubble bursts. By the way, people say, oh, that it's all a bubble. Okay, people say it's a bubble and everything's way overvalued, but yet Nvidia is only trading at 26 times forward earnings. The biggest company in the world at the center of the AI revolution right now is only trading at 26 times forward earnings, when you have what people call safe investments like Costco trading at, I think it's 48 times earnings. So just bear that in mind when people say this is a hyped up bubble.
And in our view, it's really affirming that IT spending and the visibility for AI spending remains strong. And I think we're already seeing companies benefiting from this. For instance, Google has eliminated 35% of managers seeing small teams. Keep in mind, as we think about AI, that the majority of these companies are based in the US. And that gets us to valuation. I think the company to look at in terms of AI and the uniqueness of it is NVIDIA, which currently trades at 26.6 times forward earnings. I don't think that's particularly expensive, considering that Costco and Walmart actually trade at much higher multiples, 48.5 and 39 times. And so to me, the question remains that if NVIDIA is the scarcest company in AI, why is its multiple so low relative to staples?
So, in my opinion, we're in a generational bull run. It's a no-brainer. Get yourselves a stocks and shares ISA. I can't promise you what's going to happen with the stock market. What I can promise you is that over time, in the short term, I can't promise you. What I can see, just with the history of it, is that over the long run, even if the worst happens, there's no better place to grow your money than by investing in the markets. And if you get the bug and you start learning and researching companies, and you start investing money and doing really well within the generational bull run that we're in, then you might do really, really well for yourself. And you might want to gamify it. And so therefore, you should aim to max out your stocks and shares ISA of £20,000 allowance by the government every single year. Not everywhere in the world gets this, by the way. We're very lucky in the UK to get a tax-free wrapper. You don't have one in the United States. You don't have one in Australia. Yes, there's some countries around the world that have 0% capital gains tax across the board. But ask yourself, do you really want to live there? One is like Dubai. Do you want to be like a Dubai expat? I don't. Looks like a very cold, clinical lifestyle. There's a few places in the Caribbean. There's Cyprus. I don't want to live in these places. I don't want to become some kind of capital gains tax evader expat running around the world. No, you don't even have to do that. If you start now, invest wisely. Don't make the early mistakes that SJJ made, not knowing anything with, over exuberance before I figured it all out, and put your money in the tax-free wrapper, which is a stocks and shares ISA now, from the very start, and you'll be able to buy and sell as much as you want inside this account. I could sell all my AST Space Mobile right now and then use that money to buy into Bitmine Immersion Technologies right now. Feel like I've made a mistake, sell it, and decide I want to pile all my money into Lithium Americas. And I wouldn't incur any capital gains, tax events, and on trading 212, there'd be no commission on any of those trades. It's like an amazing product. And like I say, if you don't know what you're doing to start with, then you have the option of just going on here and like investing in the S&P 500, physical gold, for instance. If you worry about exchange rates, you can even get physical gold hedged. Where is that? Physical gold hedged. Here. What this aims to do is iron out exchange rate differences. Sometimes when the pound goes up versus the dollar, or vice versa, for instance, you can lose money. If you think the dollar is going to continually weaken, this is overcomplicating it, but if you think that the dollar is going to continue to weaken against the pound, then having your money invested in dollars, your investment return is lower. If you think that the pound is going to, well, you get the picture. You can hedge your money anyway in your own currency. But hedging, you have to think that all of your other assets in life, your house, your salary, everything else is currently in British pounds anyway. So it's not necessarily a bad idea. You're actually doing a kind of reverse hedging by putting some of your money into dollars anyway, if you're in the UK, because then you're like spreading your risk between the US economy and the British economy. I mean, who believes that the British economy is going gangbusters? Nobody. So, anyway, this is overcomplicating it. Forget all that. Go and get yourselves a stocks and shares ISA in Trading 212. It's a no-brainer. And I'll see you in the next video. Thanks for watching. Appreciate you.